That looks like increased possibility. Gautam Duggad is joining us, Head of Research Institutional Equities at Motilal Oswal Financial Services. Gautam, good afternoon. Thanks a lot for joining us. I know we called you to discuss the earnings season and the preview of that, but I just wanted your thoughts on something like a Vedanta. Do you have it in your coverage? What's been your advice to clients?
Hi Anuj, good afternoon. Yes, we do have Vedanta in our coverage, but we've had a very negative sort of view on that space for last 3 years. We have a neutral stance on Vedanta, and I was hearing to your conversation a while back on the process. I think this process can go on for some more time, can be to and fro on prices. But yes, I mean, as far as we are concerned, fundamentally, we are not that positive on the metal space altogether.
Okay, all right, got that. Gautam, now let's talk about the season that's underway. Lots of hopes and expectations because some of the corporate commentary that we've got before the numbers has been quite optimistic. Is Q2 going to be a good season?
Hi, Surbi. Yes, and expectedly so, because we are coming out of a complete lockdown in the first quarter of FY21. So there has been a recovery on a sequential basis in many sectors. And if you look at the last 10 press releases from different sectors which have come out at the end of the quarter, 9 out of those 10 are giving positive, backdrop or commentary. And we've had to change our numbers in between after those press releases come out on the positive side. But if you look at the numbers holistically on an aggregate basis, it is indicating a very strong recovery on a YOY basis. For example, last quarter in Nifty, earnings declined 31%. Quarter before that, we saw a 20% earnings decline. This quarter, our team is estimating a 5% earnings decline for Nifty and absolutely no growth in EBITDA. So that's a flattish EBITDA. Now, if you go back pre-COVID levels also, we were oscillating in that range of plus minus 5% on the growth. So, I mean, minus 5% on Nifty earnings, it doesn't look that bad. And more importantly, for the quarters ahead, we are estimating a progressive recovery from here on. So, for third quarter, our team is building in plus 2%. And then on the last quarter, of course, on the basis of the 4Q depressed base of FY20, you might see a double-digit positive earnings uptick. So, yes, to answer your question, we are expecting a far better quarter than we saw in 1Q FY21.
Okay, so that's the overall view. Now, let's talk about some individual sectors. Autos have had a big rally, and at least last month's numbers looked quite good, Gautam. But what kind of earnings would you expect here? Any top picks?
Anuj, on auto, last quarter we saw for our universe cumulative loss, largely thanks to Tata Motors. This quarter, at least, we are seeing a profit for our auto universe. However, on a YOY basis, things are still looking a bit muted, 60% down YOY. But sequentially, again, the auto monthly numbers have given us a picture of what has unfolded before the festive season. And our team's channel checks for October is also suggesting a reasonably positive backdrop for the month of October and November. So auto space should remain it should remain buzzing. From our point of view, what we have in the model portfolio is M&M and Hero Motors. We had upgraded Hero Motors to buy a couple of weeks back. Clearly, the rural story is outstanding right now. And Hero is gaining market share across the segments in which it is present in motorcycles. So those are the two large cap names that we have in the model portfolio. On Maruti and Eicher, while structural story is strong, but I think at today's price, both those stocks are now building in a very strong, discounting the strong FY22 expected recovery and some more. So I will remain cautious on that side. And more importantly, on fundamentals, I would want to watch out what happens to numbers after December and festive season. Because right now what we are seeing is a inventory build-up ahead of festive season, some pent-up demand. If it sustains beyond December, it will be a very good indicator for the broader economy as such.
Okay, got that. Gautam, I also noted that you have recently added SBI Life to your model portfolio. So what's the take? I mean, we recently got the life insurance data as well. How are you slicing and dicing it? And what's the kind of growth you're factoring in for some of these top insurers?
Should be our stance on the entire life insurance space for the next 3-5 years is extremely positive. I think COVID has done a great service to this industry. There is going to be a tailwind on the protection side. Most of the life insurance companies which are listed are focusing on protection and annuity, and of course non-par as well, which are quite from a profitability point of view, their margins are much better than rest of the business segment. Secondly, as we have seen the data in September, progressively every month things have improved for the life insurance space. But the call is more long term rather than any short term view on the insurance trends. I think within the financial space, there is going to be increasingly more allocation towards non-lending financials as we move forward. While we have an overweight on banking and financial sector for last 6 odd months as well, right through the pandemic. And I think we have all seen what kind of data points that have emerged on loan growth, collection efficiency, disbursement in different segments. So we are quite sanguine on BFSI space. And from here, if the market has to rally, I think the BFSI space has to contribute a lot more than it has in the last 6 months.
Okay, fair enough. By the way, just look at Wipro's intraday chart once again. I mean, it's made a bit of a habit to have these kind of breakouts every day at around 3 p.m. Just see the intraday chart on Wipro, and that stock right now is seeing a big move. And curiously, HDFC is at the low point of the day, while HDFC Bank is at high point of the day. HDFC, of course, has seen a lot of buying, but is now seeing some profit taking. There it is, as you can see. On the other hand, HDFC Bank has quietly moved to high point of the day. That's helping the bank nifty. Look at that. IT, Gautam, of course, we've already had the big one, but the others still to come. Do you expect these companies like Infosys, HCL Tech Mahindra to do an encore, looking at TCS's numbers?
Yeah, Anuj, I think the backdrop for IT is extremely strong, and that's the point we had discussed even at the end of the June quarter results. Luckily, we had a big overweight in IT in our model portfolio, so that has helped us. We have seen double-digit earnings upgrade at the end of first quarter, and second quarter also is expected to be pretty good. What is more important is the TCS commentary. If you've heard, they had very clearly said that the tech spending cycle, whether it is on cloud or other aspects of the digital spending, has received a massive leg up post the pandemic. So all the fears that people had back in April, May about the global IT spending, I think they have been put to rest. And more importantly, the cost ratios have moderated for the tier 1 and tier 2 IT as well. So it's a best of both the worlds. Your demand has not gotten impacted as such. Your cost has been under control. And more importantly, the long-term outlook towards tech spending has turned positive. And then the cherry on the cake is the buybacks and higher dividends that we are used to in tier 1 IT now. So we are quite sanguine on that space, continue to have an overweight in the model portfolio. We have both Infosys, TCS and Wipro. And in the tier 2, we continue to like L&T Infotech still.
Okay, speaking of L&T Infotech, let me ask you about the parent as well, Gautam, because I think there's a brokerage report that people have taken note of this morning. Maybe that's the reason, because L&T has become sort of an almost non-existent stock on the index, right? Because it's just not done anything for a while. Is there any reason to look at it at the moment?
No, Surbi, in fact, we have cut our weight further in L&T in the model portfolio in the recent revision that we've done. I think the overall infrastructure spending is itself going to remain muted, given the way the fiscal stance of the government is currently, and their own balance sheets are, quite constrained. So the last thing the governments, whether it is center or state, would want to do is accelerate the infra spending. While we can hear a lot of lip service being paid to infra spending, but we have not seen the evidence on the ground even before pre-COVID. So, and for the last 4 or 5 quarters now, we have seen the collective order books of these players have been declining on a YOY basis. So they remain cheap, they offer value, but they will test the patience for an investor, especially in a market where most of the other sectors are doing quite well.
Gautam, we'll leave it there today. Thanks a lot for joining us. Have a good weekend. Always nice to have the conversation with you. Just a word on the market. It's just